Good morning and welcome to another day in the markets. Machines are going to look at the earnings calls from NXP Semiconductors and Expedia. NXP Semiconductors announced results on May 2, 2022. Interesting facts picked up from the call. Now let me turn to the specific trends in our focus in markets. In automotive, revenue was $156 billion, up 27% year-on-year, in line with our guidance. In industrial and IoT, revenue was $682 million, up 19% year-on-year, better than our guidance. In mobile, revenue was $401 million, up 16% year-on-year, better than our guidance. Lastly, communication infrastructure and other revenue was $496 million, up 18% year-on-year, just modestly below guidance as a result of ongoing supply challenges. Overall, the demand in our strategic end markets continues to be robust, putting our customers' requirements in excess of our improved supply capability. We generated $1.81 billion in non-GAAP gross profit and reported a non-GAAP gross margin of 57.6%, which is up 340 basis points year-on-year and both above the midpoint of our guidance range, driven by the improved utilization, higher revenue and positive product mix. The pace to xCV vehicle penetration globally continues to rapidly accelerate, hitting 19% of global production in 2021 and is expected to hit 23% penetration in 2022 and moving to 30% next year in 2023, with xEVs having roughly 2x to semiconductor content. I mean, it's a complicated supply chain, but I think we have now, after exercising more than 1.5 years, very close and standing relationships to the tier ones and the OEMs when it comes to these supply challenges. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And how does that impact your visibility and confidence in shipping to the automotive end market and give you the confidence you are shipping in line with demand? Even talking about recession at some point over the next 1 or 2 years, how do you think about your trough gross margins if that were to happen? Any more details on what you're seeing on China, and maybe is it a bigger or smaller cut than what you experienced in the first quarter? What are you telling your customers in particular as to how you're going to recover from the current situation and meet their demand? Does that tend to flatten out as you go through the year, and just generally, are you comfortable with the level of spending that you're at right now? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 50% positive. About growth, the sentiment was 54% positive. About outlook, the sentiment was 75% positive.
Expedia announced results on May 2, 2022. Interesting facts picked up from the call. Now onto the P&L. Total revenue was down approximately 14% versus first quarter 2019, or down 10% excluding Agencia. A slight improvement versus the 17% decline we saw last quarter. On sales and marketing direct spending, first quarter was roughly $1.2 billion, down 6% versus first quarter 2019 levels compared to the 12% decline last quarter. Looking ahead, we expect the higher than normal annual compensation increases discussed last quarter, which took effect on April 1, will result in a notable sequential step-up in overhead cost in Q2, in total $173, roughly flat versus 2019 levels, despite revenue still down 14%. Looking ahead, we expect the higher than normal annual compensation increases discussed last quarter, which took effect on April 1, will result in a notable sequential step-up in overhead cost in Q2, in total $173, roughly flat versus 2019 levels, despite revenue still down 14%. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Can you give us an update on the progression you're making there beyond just the summer travel season in 22, and how to align those marketing dollars where you want for the longer term? And any further clarity around the opportunities to drive better marketing returns at some point from just a more coordinated effort across brands? Any additional color you can add to that, maybe geographically or maybe something specific. If you clicked on a little bit more than you typically do, can you just spend a little bit more time on helping us size that opportunity for Expedia versus the core market that you've been in? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About spending, the sentiment was 80% positive. About prices, the sentiment was 50% positive. About growth, the sentiment was 50% positive.
I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.